South Carolina, Mr. Timmons for 5 minutes.
Thank you, Mr. Chairman, and thank you, Chairman Powell, for being here today. We continue to appreciate your work and the work of the Federal Reserve on behalf of the American people. In August of 2023, the Federal Reserve, FDIC, and OCC released the NPR requiring the issuance of long-term debt for Category 2, 3, and 4 banks. As you may know, I, along with many of my colleagues, authored a letter to each agency expressing concerns regarding the lack of tailoring in the proposal and shortcomings in estimating the actual cost of the proposed rules. I'm concerned that these shortfalls will negatively impact lending in my district, and when combined with the other ongoing regulatory proposals, could cause further consolidation of the banking industry. It appears that the Federal Reserve has primarily deferred to the FDIC concerning the proposal. Could you shed light on the Federal Reserve's role within the rulemaking process concerning the long-term debt proposal? And have you provided input regarding the proposal's interplay with Basel III Endgame?
You know, I think we're one of the proposers of the rule, just like the other agencies are. And you know, right now we're looking at the comments that we've gotten. That comment period, I believe, has closed. Yeah, and so we're very much in reading those comments as the law.
You're in the middle of it, fair to say.
are.
Okay, thank you. I'm concerned that the long-term debt proposal's lack of tailoring contradicts the statutory requirements of the Economic Growth, Regulatory Relief, and Consumer Protection Act. Instead of applying tailoring principles, this proposal creates Category 2, 3, and 4 financial institutions identically for the purposes of long-term debt issuances. Additionally, the proposal unduly burdens Category 2, 3, and 4 banks by requiring them to issue long-term debt at both the parent holding company and bank level, which actually could be viewed as reverse tailoring, considering GSIBs are only required to issue debt at the parent company level. What is the underlying rationale behind this dual requirement, particularly when such a mandate is not imposed on our largest banks? And do you believe that this represents a tailored approach as required by the statute?
So that tailoring question is one of the questions we'll be asking ourselves as part of our review of the comments.
Thank you. It's my understanding that Category 4 banks were not included in the original advance notice of proposed rulemaking for the long-term debt rule released in the fall of 2022. Is that your understanding as well?
I didn't catch that.
Did the advance notice that was released in the fall of 22 include Category 4 banks? It's my understanding that it did not.
I can't confirm that, to be honest.
Well, I think that's something that you should take into account because the Category 2 and 3 banks have had an additional year to foresee this challenge, and so Category 4 banks are really behind the 8 ball. And yeah, so I guess my next question is, do you believe regulatory agencies should provide smaller regional banks longer than the 3-year phase-in period to meet any final long-term debt requirements?
It's a good question. That's one of the comments we've gotten, and we'll be looking at that.
I just think if we're going to impose these new regulations, giving everyone the same opportunity to comply with them is something worth considering. I guess one final question. If these proposed regulatory changes had been in effect prior to the fall of SVB and Signature, do you believe the outcome would have been different? Because honestly, I don't think anything would have changed.
You know, it's a hypothetical. I'm tempted to say that if there had been more long-term debt there that was specifically there to absorb losses.
They were nowhere near being solvent. But I guess that's something I think y'all should take into account, whether if these proposed changes to our system that are designed to make it more resilient would have actually caused SVB and Signature to have a different outcome. Because again, it just seems that my colleagues across the aisle let no crisis go to waste, and these are changes that would not have in fact prevented the calamity that they are justifying the changes based on. Thank you for being here today, and with that, Mr. Chairman, I yield back.